So this is also the end of the petrodollar deal, in which the Saudis promised to never sell oil in another currency than the US dollar. So the existence of the dollar as the sole world reserve currency is at risk. And that's why we see these large changes. Don't forget, we saw a breakout of interest rates from a 40-year downtrend, which started in 1980. So it was not a question if gold would break out this sideways pattern of the last 4 years, but only when. And now it has broken out with a powerful move, and much more is to be expected. Political world. So this deglobalization, in which the West is trying to decouple from China, this has just started, and this will have repercussions for decades. So we're just starting in this process, and I'm not surprised that gold is being weaponized by the non-Western countries in a way the dollar has been weaponized by the US. So it's just a countermeasure of the non-Western alliance valuation process, and that might take a few years to play out, and then you'll see gold, you might see gold at 8,000, 10,000, or maybe even higher.
In today's episode, renowned hedge fund manager Willem Middelkoop discusses the unprecedented surge in gold prices and its implications for investors. Against the backdrop of geopolitical tensions, economic uncertainty, and a shifting global landscape, Middelkoop highlights the factors driving gold's ascent, including strategic moves by countries like China and Russia to bolster their gold reserves. As projections point to gold prices reaching $5,000 to $10,000 by 2030, Middelkoop emphasizes the potential opportunities for investors, particularly in mining stocks, which have yet to fully reflect the surge in gold prices. With a bullish outlook on gold and the anticipation of significant gains in mining stocks, Middelkoop provides valuable insights into navigating the evolving landscape of the precious metals market. Like, subscribe, and turn on notifications so you do not miss out our daily recaps. Let's get back into the episode.
To finance their budget deficits by selling treasuries to the normal international clients. So actually they're changing the rules as we speak to make it possible for US banks to start to invest massively in US treasuries again, and don't have them show up on their balance sheet. So QE will start very soon, and this is what gold is. A deficit, I think, north of 2 trillion for years to come. So please explain to me how the US can solve this budget deficit without the help of traditional friends like China and all the other countries buying up the treasuries. So the normal off-takers aren't willing to buy the treasuries anymore. So how can you have a situation you don't have QE when you have a budget deficit of 2 trillion? And now we have this breakout from this 4-year sideways pattern, which had a bottom around 1700 and had resistance at 2000, 2100. So now we have this powerful breakout, but that has only happened quite recently. And look at silver. Silver stocks are just breaking out for the last 2-3 weeks. And we all know from past cycles that it's first gold breaking out and silver will follow, and then the shares will follow, and especially the smaller junior shares. Sometimes they have a lag of a few months, but our fund is up 20% from the low in the last week of February this year. So the recovery has started, and on average in a recovery year, our fund goes up 70, 80, 90%. So 20% in the first few weeks that's a normal recovery, and you can expect more to come. And I think a lot of money can be made on a project which will be profitable with 1,500 gold. Many of these studies have been completed in the last few years at record low prices, one could say. And this explains why there's so much upside for many of these shares, and that's why they will go up over 100%, and some will go up over 500%. Look at SolGold, great example. It's one of our main holdings. The whole company is valued at 300 million. This is the largest undeveloped copper gold project in the world. Look what BHP is willing to buy for Anglo American today, 37 billion. SolGold should be trading north of 1 billion. So these valuations are still, look at Reunion Gold. That was a bid for Reunion Gold by G-Min Mining, but that was 0.3 NAV. So this could end up into a bidding war with much higher prices to come. So we see so much value out there, and that's why we're still able to attract money. We have over 100 million euros invested in this market. So let's say that's 130 Canadian dollars. And I expect our assets under management to grow substantially in the next few years because of these re-ratings and the inflow of new money.
In today's market recap, China's $170 billion gold rush triggers Taiwan invasion fears. Beijing on record 17-month buying spree in what experts say is a move to guard against sanctions. Silver set to surge in 2024. Silver market continues to capture the attention of investors and industry stakeholders. Silver's unique properties, such as high reflectivity and excellent electrical conductivity, make it a critical component in numerous industrial applications. Factors influencing the silver bullish market in 2024. The ongoing supply challenges, including the deficits reported in previous years, will likely continue due to limited new mining projects and regulatory hurdles, particularly in significant silver-producing countries like Mexico. Additionally, geopolitical unrest, especially in Latin America, could further strain supply chains, enhancing bullish sentiments. On the other hand, economic and financial indicators will also play a crucial role. The interplay between interest rates and silver prices will be critical, with the Federal Reserve maintaining a hawkish stance amid inflation concerns. Now we'll show you the best clips of the latest interview, but first, smash that subscribe button, hit the like button, and check our links in the description for some massive sign-up bonuses. Enjoy the episode.
How can we know? Because listen to the words of the CEO of Glencore. Glencore is a huge copper trader, copper producer. They're on the record by saying they won't invest in any new copper production before prices are reflecting the copper deficits in the market. So they know prices will go up. Robert Friedland, one of the largest and most famous copper discoverers in this world, and now a copper producer, he tells the world that copper prices need to go much higher. So look at Codelco, it's the Chilean state copper producer. Production is falling off a cliff while we need copper production to increase. There's a copper deficit already, production deficit in the market. Goldman Sachs expect copper shortages to appear. We see several off-takers in South Korea and China complaining about shortages in copper concentrate. So if copper shortages are starting to develop, and the whole world needs this energy revolution and these EVs. In a Tesla, you have 6 times the amount of copper than in a traditional car. So copper will go much higher. And that's why 20-25% of our portfolio is copper related. Copper, oil, many commodities are being stocked. I think the government has an approach in which they tell their main partners, banks, companies, to import much more commodities than will be needed in the next 12 months. I think China is afraid for a even worse crisis with the US, which could lead to naval blockades or whatever. So don't forget that commodities, as Zoltan Pozar, who's a famous analyst who was with Credit Suisse, he wrote it 2 years ago, there's a new monetary system coming from the East, and that will be built around commodity-based currencies. So we shouldn't forget that if you analyze these markets with the knowledge of the past, you will make a mistake because the whole world is changing rapidly. Investment perspective. And of course, the halving that's just of interest to the miners because they are getting paid half for mining new blocks. But it means that fewer and fewer new coins will be available. And as you might know, there can only be 21 million Bitcoins be mined forever. And we already reached 20 million. So soon new Bitcoins might get scarce. And now with the ETFs and the huge inflow of money, and don't forget, there's over 300,000 billion of money looking for a return or an investment. So some of it will go to crypto, some of it will go to Bitcoin, but more will go to gold and copper because we need these hard assets. But from a personal portfolio perspective, I think you should have a bit of both.
We hope you've gained valuable insights into the exciting developments in the gold market and the opportunities they present for investors. What are your thoughts on the projected rise in gold prices and its implications for the future? We'd love to hear from you. Drop a comment below with your thoughts and join the conversation. And don't forget to subscribe for more insightful discussions on the ever-changing world of finance. Thank you for tuning in. Watch this video right here because it's a perfect fit for you. I see you on the other side.